I got you, bro. I got you, man. But I'm glad you can make it, dude. It's always good to see that you're here, bro. Still dedicating yourself to your craft, and yeah, anything that you need, Chris and I are always here, bro.
Appreciate that, fam.
Oh yeah. Well, with that said, guys, let's cut the crap and get straight into the brass tacks here. Let's start talking money, markets, and how this week is going to look for us. So what we're gonna do is just go over basic principles once again because I want this. I know it's gonna get you guys are probably tired of me talking about the same shit over and over again. But this is the stuff that makes you fucking money. If you just memorize everything that I'm fucking telling you, every goddamn training, I promise you, I promise you, I promise you, this is just gonna be like the back of your hand. It's literally gonna be like the back of your hand. So, basic principles. Once again, the holy trinity of our method. We're not going to get too much into depth with this. So we're going to breeze through most of this stuff because I said I don't want to keep repeating the same shit over and over. But basic principles, the holy trinity of our process stems from these three things: timings, levels, behavior of price. Let's start off with behavior of price because if you don't understand how price behaves, you will never create an edge for yourself. Understand, it's not about these secret little fucking patterns or the setups that we're teaching you guys. If you don't understand why they work, why they happen, when they happen, when they happen, how they're supposed to behave when you're in the fucking trade, when you're not in the trade, when you're stocking your trade, you will never ever have the confidence to execute and perform amazing when it's real time. Everything that we do in here is real time. You guys see that, man. You guys see that every fucking day. Chris and I call shit out in real time. Nothing here is cherry picked. It's all real time. Obviously, when we do our homework and we're going over the trainings, we obviously have to cherry pick a lot of stuff. But net man, when we're in lifetime, we're fucking honed in. We're plugged into the matrix. We're different people at that point. And if you don't understand how price behaves, you will never succeed in this business. So let's start with behavior of price. Price can only do one of three things. It's either going to go up, it's going to go down, or it's going to go sideways. Plain and fucking simple. When it's up, it's a bull trend, it's an impulsive move, it's an uptrend, whatever the fuck you want to call it, whatever makes you happy, sleep at night, call it whatever you will, bro. At the end of the day, it's all the same shit. Okay? It's just the price is going to go up, it's going to go down, or it's going to go sideways. When it's in a range, it's called the contraction phase, consolidation, a choppy market. It's all the same shit, dude. Now, when it's in a range, remember, up, down, or sideways. Now, when it's in a range, it has two types of behaviors. At some point in time, it's going to have to break out, pull back, and continue, or it's going to have to break out and fail. This is usually manipulation, when it breaks out and it fails. Now, this could be in the form of a stop hunt, a false breakout, whatever, etc. They trap volume at the highs, lows. Same shit. It's just manipulation in its essence. When you start to understand and dissect the order flow, then yeah, that's when you have to really, really dissect
I just
what
posted an
happened there.
Instagram.
They trap buyers, sellers. The volume was it just a quick liquidity flush, stop hunt, etc.
You can quickly and easily post any reel
even then,
you
you
want.
don't have to get too into detail with that. As long as you understand where the market is gonna fucking go, that's the important thing. Which brings us to the main point of understanding the behavior of price. Our job as traders, we're burdened with three fucking things. We have to analyze what happened prior, what is currently happening, to anticipate what is likely to happen. Keyword there, likely. We're never going to know 100%, but when you have certain elements that tie in, with this, our filtering process, our checklist, the order flow, our understanding of price, bro, it's almost like you're going to see into the goddamn future. Your level of confidence and your strike rate is going to go up the roof when you understand what I'm talking about right now. So that is the job that we're burdened with as traders. We have to analyze what happened prior, what is currently happening, to anticipate what is likely to happen, and it's going to come from this behavior of price. Okay, so up, down, sideways. When it's in a range, breakout, pull back, continue, breakout, and fail. Now let's talk about the elements of trends. So this is just the basic template of behavior, not the template of trends. The basic Dow theory of an uptrend is straightforward. Price has to make a higher high, higher low, higher high, higher low, etc., and you're technically in an uptrend. Anything that invalidates these structure points now has shifted the trend in Dow theory. Okay? Same thing for a downtrend. Lower low, higher low, lower low, higher low, and boom, you have the elements of a downtrend. Now here's the fucking problem with the foreign exchange market. Oh, and actually in a range, these are the actual dynamics of a range. So when price taps a previous high or low multiple times, you're now in a range. And it's failing to follow through in any particular direction. They're usually called equal highs, equal lows, relative highs, relative lows, etc. Man, I said it's all the same shit. At the end of the day, just understand that that's what's going on. Generally, our understanding is that within 2 contact points within a level, that's when you're in a range. And ranges, when you study the behavior of price, there's everything in the markets is fractal, from higher time compressions to lower time compressions. But we'll get into the fractal nature of markets in a little bit. The point is that what you see on higher time compressions, you're going to see on lower time compressions. And then ranges can last from fucking hours to days, weeks, months, and even years. Okay? The point is, when you have key levels or key structure points, and price is failing to make any significant follow through after 2 contact points, that's our basic requirement for a range. 2 contact points on either side, you have the elements of a range. And in particular situations, you can get range expansions. So price might breach a low, but that doesn't mean that you're in a trend really. It just expanded the range. And it's going to put in a new high. Guess what? It expanded the range. Now, from our understanding of short-term order flow, when we zoom in on lower time compressions, yes, this is manipulation. You have your 1 push, 2 push, 3 push, sell week template, break in structure, little micro ranges, etc., etc. That is what's going on as the range is expanding from a macro standpoint. But when you zoom in, you're starting to understand the order flow. Oh yeah, that was a false break, trap volume, stop hunt, etc., etc. But that is the behavior of a range. 2 contact points at a level of resistance, support, and then in some instances you'll get expansions of the range. Where, just because it breaches it doesn't mean it was it was a false break on lower time compressions. But on a macro time scale, most big institutional players are going to see that as an expansion of a range. Until it actually breaks out in one direction or the other. So that's it. So going back to this, because this is going to be fucking important, okay? So when you have the elements of a higher high, higher low, higher high, higher low, etc., that's just Dow theory. And I went off about this shit on one of my Instagram posts about like everything in theory sounds good, but in practice it's a whole fucking different animal, especially in Forex. So you don't get perfect templates like this. You could still have this in the foreign exchange market and still be in a macro uptrend. You could put in a high, low, high, deep low, high, collapse that low, and then you could still be in a fucking uptrend, bro. And this invalidates all the principles of Dow theory. So you put in a higher high, higher low, higher high, boom. If you got that break, that is generally signs that, that trend has terminated. We're most likely going to go in the opposite direction. All the while, big institutions are trapping sell volume here to rip it in the other direction. That's why you get these aggressive swings, volatile swings in the markets, these parabolic moves, these parabolic short squeezes. That's why we like to long as well. The chaotic nature of the Forex market, man, if you understand it very well, can breed a tremendous amount of opportunity. But if you don't understand what I'm telling you, you're going to be the guy that's getting caught every fucking point that the market breaches a significant structure point. So there's that. Just understand that in the foreign exchange market, trends don't play out as beautifully as this little template, okay? In the times that it does, great, but I would be very, very cautious and weary of it. I would be very skeptical because more often than not, when you have these nice, consistent trends, what do you think is happening? Liquidity is being engineered and trapped at these structure points. And then that's why eventually you get those strong stop hunts that flush out all that liquidity. You see it all the fucking time. You see it all the goddamn time in the foreign exchange market. That's something I want you guys to be very aware of. So now let's talk about the last element of the behavior of price. So we talked about what price can do, what happens when it's in a range, and now let's talk about how trends end. Because this is so important, man. If you don't understand how trends end, you're either going to be trading against the wrong trend, or you're not going to be able to maximize the optimal potential of that trend, and you're not going to know how to basically trade the reversal if it does come. And you're going to be caught on the wrong side. So trends end through massive extreme points. What do I mean by that? Where volatility and volume begins to accelerate. And how does that look? How is that reflected on a price chart? When volume and volatility is increased in price, it's injected into price. What does that look like? In an uptrend, you start to get these very strong parabolas in price. Like you just get like this hockey stick looking type of price. You saw it on the fucking, let's see. You rarely see it here in currencies, but we did get a good example of that in, here we go. The dollar yen. This is just a parabolic, explosive uptrend. One push, two push, and then generally volume gets trapped at the high, and then boom. Look at that. Liquidity. Flushed, bro. Yeah, it didn't nick that low, but it sure cleaned out all the fucking stops where people would have trailed their stops or put their stop orders. And then boom, and it was off to the fucking races again. Will it happen again? Absolutely. This shit happens over and over and over again. But that is what a parabolic blow-off top looks like. So, to reiterate, uptrends end in that manner. They end. This is a parabolic fucking move. Look at this. This is the Euro Turkish lira. At some point in time, it's going to blow off. This is the parabola that I'm talking about. Like when things start to accelerate like this, you don't want to fucking chase this. I promise you that, because at some point in time, you're going to be the guy playing musical chairs, and when when the music stops, boom. You fall on your fucking ass. And in this case, you're going to lose a lot of goddamn money, bro. You don't want to be trading massive leverage when you start to see these parabolas in price. You want to be the guy that's in early. You generally start to see parabolic blow-off tops in thinly traded markets or illiquid markets. Considering that the Euro Turkish lira is an exotic pair, yes, you're likely to see parabolic blow-off tops because there's not a lot of volume in that. So price can move through massive extreme points. Which you're going to end up seeing a lot in the foreign exchange market. So that's how uptrends end. Remember, parabolic blow-off tops. Eventually you get a peak formation high, and then boom, it just collapses. And then how downtrends end is price will start to trend, and then eventually it starts to accelerate lower, and then you just capitulate. Capitulations and parabolic blow-off tops 98% of the time. Honestly, I would go so far as to say 99% of the time. Yes, there is that small, little, minute percentage of the time that it just does not work that way and it keeps fucking ripping or going in one direction. But 99% of the time, guys, if you see this on macro trends, you now know, you are now equipped with the information and the knowledge of what you need to do. If you start to see this, you know you need to trade in the opposite direction, because 90% of the time, these things will have aggressive fucking reversals. When you capitulate, 99% of the time, you're going to get a very sharp bounce. Let's go over several fucking examples of this, man. Okay, Euros are not a good example of this because this is pretty much an upward trending market. Aussie Singapore dollar, here you go. Capitulation. Look at that. Look at the aggressive expansion and nature of this move. You closed with a negative, higher time compression, negative candle close with the wick at a key level. And then boom. And look at that fucking reversal, bro. Same thing here. Capitulation. You're trending down. Nice little down through you, bro. Look at that. Boom, boom. Higher high, lower highs, higher lows, lower lows, etc., and then you aggressively accelerate into the low, and you just fucking reverse, dude. You just reverse. There's countless examples of this. all over the damn place. Look at how price behaves when you capitulate like that. Capitulation here. Look at the acceleration of that move. And look what happens after. Price just reverses. You're going to see this a lot in Frank crosses. We saw this very recently with the NZD Frank, and that was our cue to go long. Why? Because we saw capitulation into a fucking high volume zone, into our macro funnel setup. First target, micro targets were made. But when you get capitulations in this fashion, man, negative candle closes or bearish candlesticks, as you guys are accustomed to, and you see massive wicks like that, they're generally high probability scenarios for reversal. So you know where you need to fucking trade. You want to be a buyer of this. You don't want to be fucking shorting this. You want to keep buying it until you have reasons to believe that it's no longer going to keep going up. And we still have plenty of fucking room. We have this high. We have this high. Can price reverse up there? Absolutely. But until then, you have plenty of room to keep ripping higher. Of room. So there's countless examples. You're going to see this is very frequent behavior in yen crosses, bro. Yen pairs tend to do this shit all the fucking time. Capitulation here. Capitulation here. Here. And the yen crosses do them in such a shorter time scale and even macro time scales. Capitulation here. Look at that fucking bounce. Capitulation here. Look at that fucking reversal. This is a macro reversal here. Study this stuff. It will improve you as a fucking trader. Look at this. Look at how the trend is just consistently trending downwards. The velocity starts to pick up, volume picks up, and then you start getting these elongated candles. You don't want to be counter trending this stuff because you will get fucking wiped out. And then you capitulate it right here. If you zoom out, you can see the vertical nature of how that looks. But you tie it in with our principles, grind line break. You might get a little funnel down here on a 15 minutes of time compression. False break. This is 90 seconds. You see the funnel with the false break and it closes back inside the funnel, bro. You need to be balls to the fucking walls along with that. Because it will play out. So yeah, that's how trends end. Parabolic blow-off tops and capitulations. And when you start to see that, you know that at that point the trend is coming to an end and you're going to have to play in the opposite direction.
It's kind of like what's happening with the UC right now, dude.
Many years. And I was on... It happened with the fucking Aussie dollar, bro, when I lost that massive sum of money in the tune of $55,000. $55,000, bro. And Chris witnessed it all. But he also witnessed me make my fucking comeback in front of everybody's goddamn eyes. Why? Because I didn't understand the nature of how trends end. That was the missing puzzle piece to my process.
On that note, Dave, you may be having a trend shift on the USD CAD live if you want to check that out.
USD
Smaller
CAD?
time frames. Yeah. Same trade we're on.
Take a look at it real quick before we proceed with the training. Take a look at the hourly. Yeah, I mean, I'm still fucking long, bro. I'm still fucking long. I mean, we're making money, bro. We're making money. So, yeah, we got that classic move, bro. Classic move. It's this shit doesn't change, guys. We're doing it in front of your faces. Look at that. Grind line break. Low of week. Last week breached. Negative candle closes at those lows. Look at those fucking wicks. Start to base out, funnel out, high volume area, geometric targets. You got that breakout, aggressive return move, and then started to base out at the high volume zone. When you start to see these wicks down here or negative candle closes at the price splitter or the medium price line, and it continues, bro, you need to be long.
Just to pick your brain, Dave, why are those wicks important, the red ones?
They're important because it's letting you know that something massive is buying. So the problem is you guys, so this is a form, and I'm glad you brought that up, bro. I'm glad that you fucking brought that up. Okay, so let me dissect the nature of why we look for negative candle closes. Let's talk about candlestick patterns as entries for retail traders, right? When you start getting into the aspect of retail trading, man, whatever information you find on fucking baby pips or books online, fucking YouTubers, influencers, whatever. Generally, you're taught that good reversal points or good entries are when you see a bullish hammer. I promise you guys, if you guys haven't seen this good, you have not yet been indoctrinated with fucking bullshit. But this is most retail traders' confirmation to go long. You see a bullish hammer. Now, this doesn't mean that they don't work, but their strike rate of working is unbelievably low. Why? Because algorithms and big institutions know that you're going to use that to fucking buy. You get in at the close, your stop order there, because if this is a legitimate hammer, it should just immediately reverse. The algorithms fucking pick that up. Something already let you know that they bought here. That they bought here, and this is the maximum price that they're going to get, in for. Now, when you understand that, let's remember, when you're trading, man, you guys have to understand that if you want to buy something, somebody has to be willing to sell it to you. And if you want to sell something, somebody has to be willing to buy it to you. Now, this is going to start to make sense when I start to explain negative candle closes. So you guys have to understand the power of negative candle closes with wicks. When something is trending down and accelerating down at that, do you understand the amount of fucking capital that has to go in as price is accelerating down to push it fucking up? So when price closes on a negative print, and then you see that wick, but it didn't turn bullish. That's the thing. It didn't turn bullish. What do you think that's communicating to you? That something massive just halted that fucking trend. That is the most accurate thing that you could get to as getting close to understanding that something massive just interacted right there.
It's like the basics of physics, Dave. It's like if you're moving a very fast car.
Beautiful, bro. Absolutely. You couldn't have put it any better. That's a perfect analogy, perfect example. Things in motion tend to stay in motion until an equal or opposite force push it in the different direction. Or greater force, so to speak. So do you understand where I'm coming from, guys? I know maybe this is a little, I'm not explaining it well, but when you see a bullish candle close, in big institutions, they're not going to buy high. Retail is buying here. And then they're going to put their stop order at a very obvious place. But when you're accelerating down, and then you see a negative candle close and a print with a wick on it, first of all, something is telling you that they just fucking halted that goddamn trend. The amount of volume and capital that has to go into that as prices being sold down is fucking massive to begin with. And then on top of that, you're getting in at a cheaper, attractive price. Do you think retail is paying attention to that? No, it's big institutions. Why? Because when you get a negative candle close, you're getting the best fill and best spread possible. As opposed to buying when price closes bullish. Because in case you guys haven't noticed, whenever you buy, you don't get filled in at exactly the price that you buy. Say you want to get in here. Your entry is fucking here, right? So now it's going to take 5 to 10 pips to break even and to be in the fucking money. Now, for the average retail trader, that's not going to mean shit. You're going to be negative pennies, a couple dollars, maybe $10, maybe even $100. But when you're an institution trading massive goddamn size, every pip counts. Spread counts. Your fill counts. How you deploy your order strategically counts. Why? Because those little pips, those 5 to 10 pips, are the difference between hundreds of thousands of fucking dollars, if not millions. Because these guys, they ain't trading little 100,000 units. No, not even $1 million contracts, bro. These guys are trading 100 million units at a time. Like, that is how you fucking move or stop a trend. That is why we look for negative candle closes. Not because it's some pretty little pattern. It's not because like, oh, it's just something that I've noticed. Yeah, it is something that I've noticed, but there's reasons behind that. When you see negative candle closes, like let's go over a couple examples of, I think we did it in a prior training, man. They're often the best reversal points because of what I just explained. Negative candle close, sharp bounce. Even if it's temporary. Negative candle close, sharp bounce. Negative candle close, look at price rip. But you want to identify them at the lows. And it doesn't mean just because you see a candle close like that, just start buying immediately. No, that's not what it means. It means we're getting close to a bottom.
Yeah, it has to
But you see that? Look at
coincide.
that. Wick right here, and then boom.
Yeah, it has to
Off to the
coincide
races.
with everything else, that makes a good trade,
Yeah, no, exactly, man. Exactly. And then you see it here. Look at that aggressive wick. Most retail traders would have seen this in real time, be like, "Oh, this is time to fucking short." It broke price, and I fucking see it all the fucking time on Twitter, bro. It's a changing character, chalk. I was like, what? Anyways, whatever. To each their own. But anyways, you get a break there. Retail's gonna start seeing that pullback return move, and rightfully so, rightfully so. But if you see that, bro, that's generally signs that something massive is fucking buying this up.
To explain
And
the
you don't want-
psychological part of that, if you don't mind zooming into that candle, Dave.
Which one?
This
one right here.
Mm-hmm. So right before market closed, you guys see. I hope you guys know what a wick is. It's pretty much that's the stick, right? And
Yeah.
he explained pretty much what the body is. Before it closed, it was completely full. So in order for something to step in and leave that foot mark, that shows you there's a change in direction or something stopping the current momentum.
Yeah. Chris is absolutely right. Before this candle finished, before that hourly candle closed the way that it did, you have to understand that in real time when you're seeing this, man, it was full. It was a full-bodied candle. So when you're a retail trader that has no real process, no edge, no methodology, you're fucking chasing that. And then when the hour finishes, the session finishes, and you see that, 9 times out of 10, you're getting trapped. Same thing here. When price opened, it put in that high first, and then it was working its way down, and this candle was full in real time. You're chasing that, dude. And then as the hour ended, boom, you get that wick. Something massive was buying here. And then look, right on fucking schedule. Look where it happened. 1.08 timings, levels, behavior of fucking price, bro. This happened. Oh, well, look at there. 9 a.m. New York session. There's no fucking smoke and mirrors in here, man. What I'm telling you fucking works. It happened in our timing window, New York session. It coincided like this right here. Us, because we're a little bit more informed, we would have seen a break of structure here. This was a significantly prior weekly low. We're looking for continuation setups. We would have seen this as a stop hunt. Expansion of the range, high. And this is your double swipe setup or your V-stop setup. It's nothing new under the sun. Timings, levels, behavior of price. New York window, 9 a.m. You got that final hourly close, 1.08 level or key round number. Also, it breached the key structure point. It breached that low.
And if you execute perfect, Dave, on that exact example there, just imagine how tight you could have your stop. That's why when you're able to coincide everything pretty much that we use to enter a trade, you can get away with some stupid risk to rewards if you are able to coincide everything you know all at the perfect time with what David's explaining.
That is fucking stupid, bro. That is just at the high. That's not even if you leave some runners open, bro. Just at prior high, you're looking at a reward to risk profile of 1.6.84. Meaning every dollar that you risk, you're making six times that, essentially. Almost 7 times that. So if you risk $100, you just made $684. If you risk $1,000, $6,840. $10,000, $60,840. People are making that kind of money in the fucking market. You see the money being made every fucking day in the markets, dude. And Chris is absolutely right. These negative candle closes also provide very, very opportunistic times to enter with the tight stop. And if you understand where the trend is going, you take your targets at the midpoint like we teach you, and at the high, you're in, you're fucking out. And that's it. Because if you don't take your fucking money like we teach, look what happens. Boom.
Yeah, that's why it's so important to come in with a game plan when you're looking at a chart. It's like most of our decision making is made real time based off what we know at live moment. It's not something we're preparing. Like hopefully I get the setup I want. Hopefully I get a red candle close. It's reacting of whatever price is giving you at that very moment, and you entering already with a game plan. Already know where your risk is at, where your a possible reward's at. A lot of it once again is just reacting live time. You have to be ready.
Yeah, amazing. Yeah, Chris couldn't have said it any better, man. This is why you have to be equipped with the skills. This is why you have to constantly be here at these trainings, because Chris is right. Even though you have the prerequisites, I like to compare trading. This is what I say. I truly believe we're like akin to the Navy SEALs, bro. Trading is like being in the fucking army, bro. It's very close to war. You're equipped with the skill sets to survive. Combat training, marksmanship, gun training, etc. And physical training, mental training. You're equipped with the prerequisite skill sets that you need in order to survive. But every fucking situation when you're thrown out there is going to be extremely different. It's never going to be a black and white, bro. Like, okay, say you have a fucking, a target to kill, right? You have an option. It's a long distance shot. What are you going to use? A fucking handgun, or are you going to use a sniper to get the job done? You use a sniper. And then when you're close to close combat, if you have the opportunity, you got to use it whatever skill sets you have at that disposal for that particular situation. And trading's no fucking different, guys. Chris and I, the reason we have a high strike rate is not because, once again, we know what's going to happen. We don't. But we've seen enough things over and over that we're prepared for that situation, and we have a lot of weapons in our arsenal to take advantage of that situation. We're not a one-trick pony here.
To add on that, Dave, if you don't mind, I'll kind of give you the example that I think of. I've said it a couple times. I'm sure you've heard me, Dave, where I see trading as a sport. I mean, if you guys have ever played a sport, anything, football, soccer, even a hobby, skating, or whatever it is, when it comes to performing and being the best, let's say just like an athlete in the sport, it's because of experience. You know what you're doing exactly in lifetime, and you have a set of skills, and that's just you in motion. So that's the way I see trading. It's a sport, and the cool thing about this is 24/7. You know what I mean?
Every game is going to be different, but you're prepared to handle those situations, and it's no different with trading. So I understand that that's probably not what you guys want to hear. I wish I could come in here and tell you, yeah, man, dude, all you got to do is do this, this, and that. You're always going to fucking make money. It doesn't work like that, bro. Our job is to equip you with the skill sets, and that you take my hand and Chris's hand, people who have been doing this for many, many fucking years, and you see us in lifetime. What we think, how we analyze certain things, how we interact with the markets, how we engage when we're in the trade, how we manage our trade, how we manage our risks, whether we add, whether we cut early, et cetera, man. This is a very dynamic process, but it gets easier over time. It gets very, very easy over time. Yes, we've simplified that process by giving you guys a filtering process. You know exactly what to look for, which we'll cover here. Our blueprint, I'm going to reiterate it over and over and over again until it sticks in your fucking head. We have our checklist, our criteria filtering process, our blueprint, our A1 setups, 90, 10, 5-star setups, man, that if you just only focused on that, you just got to fucking make money, bro. You just have to, et cetera, et cetera. We make that process easier for you, but what do you do when it doesn't work out? What do you do in the times that setup doesn't work out? How do you handle that situation is what we're trying to get at. How do you take advantage? How do you adapt when that setup no longer plays out after a large sample set of trades? Mind you, Chris and I, we were masterful shorters not that long ago, a couple years ago. All we did was pretty much short the fucking markets, and it just stopped working. It just stopped working, literally overnight. Over fucking night, our edge was gone. And we would talk about it, and we're like, rather than suck our thumbs and kick rocks, like, damn, dude, do we really know what we're doing? I don't think. No, we're like, okay, what the fuck is going on, dude? Like, am I the only one that's feeling this, bro? Do you see it? Do you feel it too? It's like, hey, we just gotta adapt. We gotta adapt. We gotta figure out why it's not working. And then we started noticing that the markets back then, dude, our setups were very fucking simple. We had sell week templates. They literally looked like this. You had a little break in structure, you had a little micro range, and then you had a stop button. And it was just it was almost like a V-stop, bro. It was very straightforward. You could get in with a tight fucking stop. Now, what you do is when you get a range, bro, you just grind and grind and grind. Perfect example of this, bro, is the fucking euro. This is why shorting is now a pain in the ass. Think of all the people who got in short right here. stopped out. Short here, stopped out. And for all I know, it could come back into fucking news. We have news in Euro London session at 1 a.m., 3 a.m. We could fucking spike higher before we collapse in New York. It could happen.
That's such a good example, dude.
Yeah, this is literally why shorting changed the game. Because back then, you would literally just get this. You would have your range. You would have your established range. And if we saw that the trend was still down, we'd be like, oh, there's a stop hunt. Little boop, double swipe, break in structure, close back below. And it would literally just follow through. Literally. No stress on the fucking trade. No pushback, no heat, no stress. We were in, we were out sometimes within an hour. We were printing fucking cash. And then our last setup was our accumulation setup. We called it the box. Literally, it was contained in a box, and then it would breach that box, and then boom, pop back in. Oh, and then we hit that bullish rotation cycle. Cycle 1.
Taking me down memory lane, dude.
Oh my god, bro. Dude, those are the best times to be alive. And this setup right here is what got me out of that $55,000 hole. Just the setup alone, bro.
Honestly, Dave, it was pretty much COVID. All the liquidity that was put in the market that changed our edge. You know what I mean? You have to quickly adapt with knowing what we know and just pretty much altering our system. I remember the moment. It was literally COVID.
Yeah, you're right, bro. It was overnight.
Yeah,
this is why the markets are so challenging, guys. This is what I want you to understand. You're going to have the skill sets, but you need to have the confidence and humility. I can't stress this enough. You need to operate your life with humility, not just in trading, but in all aspects of your life. Because what you do outside of your life is going to come over here, and how you conduct yourself here is going to reflect outside in real life. So how you do one thing is how you do everything. That's what I want you to understand. I could sit here and be a good person and this and that and talk like I'm a good person, but what if I was a fucking asshole outside of the screens? I would hope that I'm not. I don't think. I mean, Chris has hung out with me and stuff like that, but and many for those of you who haven't met me, but for those of you that have, I would hope that I'm a decent person and this and that. Like the point that I'm trying to make is be authentic with everything. How you do one thing is how you do everything. Don't just be a disciplined person here in the markets and then outside of that you're fucking undisciplined. Because I promise you that lack of discipline outside is going to work its way back into the markets. Is what I'm trying to say. That's the message that I'm trying to convey. If you're an anxious person out in real life, it's going to bring itself into the markets. If you're a late person, if you're not a punctual person, what the fuck makes you think you're going to be punctual for the markets? You're going to oversleep when it's fucking go time, when it's time to hit your sessions. And Chris is absolutely right, bro. When COVID hit, over fucking night, our setups just changed. It wasn't working anymore.
To jump on,
but you didn't hear me? You were saying, bro?
To jump on that humility part, it's so important because like when we're performing here in the markets, we literally have to conduct ourselves in a professional manner to the point that if we get a negative outcome, we have to backtrack and pretty much see why didn't our setup happen, and we have to learn from that. Kind of the way that you're relating things to life. When you do something stupid, there's always a bad consequence. So you have to be willing to learn from your mistakes, but really learn. Don't just it sounds so cliche, learn from your mistakes. You really, in this case, it's going to cost you money. So you have to be a professional if you really want to learn this, where you're really, it's the only way you're going to make it. I always tell people, and I'm straight up with them, if you're not 100% into trading, good luck, you're not going to make it. You really have to sit yourself down and say, okay, what the fuck did I do wrong? Why my setup didn't work? And then Dave kind of touched on this before. I used to love when I used to, whenever I saw the green and making money, that's what it started from. This is the reason why I like trading. But eventually, the reason why I fell in love with trading and I know that this is all I'm gonna do is because it's so relatable to life. If you master this, it just happens to be the reward is money. That's pretty much all it is. You have to conduct yourself as a professional, is what I'm saying, guys. And you have to be 100% in learning, or else, unfortunately, the mistake in this is you lose money. And we're not here for you guys to lose money. We're pretty much here to take you guys to water, and then you guys eventually drink water, and without us needing you to take you to water, if that makes sense.
That makes perfect sense, bro. And I love that, man. And if I could just touch on that one point on like conducting yourself here, man. Yeah, Chris is right. You have to don't just treat this like a fucking hobby. Is what we're trying to say. Because you will lose money. If you dedicate yourself to this, I said this doesn't have to be what you want to do, for a career or full time. But if you're gonna do it, take it very fucking seriously, dude. Because this is a game that's either gonna make you money or it's gonna take it from you.
And just
And that
know
is a
it's the
painful-
best fucking skill you could learn. Because imagine you have the skill of making money literally in your own hands as long as you have the capital. That's why I work a 9 to 5, because I like to trade knowing that my capital is good and I'm not worrying about money I'm losing, let's say, for bills and stuff like that. I'll find a way to take care of it because I have a 9 to 5. So that's the way that I see the market. I'm a lot more relaxed when I'm risking money, knowing that everything else is taken care of, and I get to handle this in a professional manner. And I'm not in it to lose money. I'm here to make money.
Yeah, like I said. So we can help you materialize whatever goals you want, whatever they might be. But you also can't drag your feet. You have to put in the work, and a lot of it, like a lot of the work, as I said, is studying the templates that we teach you. Being here on these fucking trainings, on these calls as much as you can, as long as you can. I understand that a lot of you guys have your lives to live. I understand that, man. But take this very seriously, because this, bro, people commit suicide over this shit, and it is sad. People literally go through psychotic cycles of depression. I've met these people. I just talked about this guy not that long ago on my Instagram about some guy that just can't. He's like on ICT's ass or something, bro. He lost over $100,000 applying his principles and still apply the arrogance, bro. Like, you guys see where I'm coming from? The arrogance to think that if something is not working for you, it's probably because it's fucking wrong. And if you lack the humility to see some other alternative, dude,
you weren't supposed to be in here anyways.
Yeah, the game is just gonna keep teaching you some very painful lessons, man. Bro, like I said, if you guys could just see the look on this guy's face when I first met him, bro, it was like a face of just, he had to push himself to smile. It was a face of despair, sadness, like something was eating him up, like damn near teary-eyed. And yeah, when he fucking trauma dumped on me, I'm like, God damn, bro, fuck, man. But at the end of the day, man, Chris and I, we've tried to be the heroes for so long in this industry, and unfortunately, it's just most people don't want to hear that. They just want the quick show me how to make $1,000 a day, and this is easy. It's just not, bro. Even to this day, for a guy who has made multiple six figures doing this, who makes 6 figures a year doing this, you see me working all the fucking time, man. I practice what I preach. I'm not talking out of my ass, dude. I'm always working on my edge. This is how you stay in the game. The best traders are workhorses. We're not show horses, bro. We're the guys that show up every fucking day and get our job done. And that's it. Like, for example, today we didn't do much. And I made it clear, I think it was Sunday night. Or early Monday morning. I made it very clear, guys, don't expect much today. Not much fucking happened today. Other than, the little setup on the dollar CAD that we were going to get the potential that it was likely to move in our favor. But that was all intuition. I'm like, just the volatility is not there. No significant high impact news. But hey, we see along. And mind you, we're starting to get that turnaround. And it's probably going to actually move in our favor this week and into next week. This is fucking skill. Chris and I, we've studied this shit for so long that we just know how it's likely to play out. This was not going to play out. If my intuition was telling me just cut the fucking trade, I would have cut it. But a lot of people said, dude, I was buying fucking up down here. And I had to sit through all of this chop. But I told you, we didn't take any leverage trades. I could hold those little micro lots, bro. They're nothing. My P&L is down like $300. But it's about to recover, bro. I'm about to be in the fucking green because I got some trades. I'm still holding the trades, And we made money on this parabolic spike. We called this parabolic spike on Friday. What did I say? Fridays are generally reversal days. Doesn't matter what the fucking trend is. On balance of probabilities are reversal days, and we got just that. Study this stuff, guys. So before we keep on rambling, let's go ahead and go over our the final elements of the Holy Trinity, and then just go straight into the blueprint, and then we're just going to review our watch list to see what we're going to be paying attention for the week, and we're going to call it a wrap, man. I want you guys to enjoy the rest of your night with your family, do whatever you want, but get the work in, man. Get the repetition in. Get your screen time in. So we post all this shit in real time. Study the stuff that we have for you. Before I go to bed, bro, I live, eat, and breathe this shit. I look at charts every fucking night before I go to bed and when I wake up. This is my life, I love this shit. 10 years in the game, and I feel like a little chubby fucking kid at a candy shop, Like, I get excited, bro. I get fucking giddy, You know, it's my shit, man. So, anyways, hopefully you guys can feel my passion. I really hope that you guys feel this one day yourselves, because if you don't, this is just not for you, man. But then again, I think Chris and I just have that immense passion because we're good at it. You know, we make money from this. We're good at it. So hopefully you guys feel that one day. And if not, you know, we're going to try our best to help you get there. But
there's so many other things you could learn just from even giving this a shot. Like the way that you once again hold yourself here is a representation of how you deal with things in real life. Because shit doesn't always happen good in life. It's how you react, what you're willing to learn,
yeah,
and how you bounce back. That's literally life.
absolutely, man. Hell yeah. So anyways, back to our little holy trinity here: timings, levels, and behavior of price. We've already covered pretty much every aspect of behaviors of price. Are there any questions on this element, guys? Speak now or forever hold your peace. Any questions with how price behaves, how it moves, how trends end, how they form, etc., etc.?
Sal, I see you in here. Give us a little comment, something. Give us something. See what you got.
Yeah,
Good, man.
so I think
I'm a man.
Pick our brain a little bit.
It's what was the next thing after price behavior that you're gonna talk about, Dave, or you're gonna go over?
I'm going to go over timings and levels right now, but I just wanted to make sure, because behaviors of price has a lot more elements to it. That's why I wanted to cover it first. Timings and levels are pretty straightforward. But behavior of price, man, understanding the dynamics of price is important, man. But is there anything that you personally didn't understand or that you might have questions on, or like
Or
Chris
agree
said, man?
with, yeah, that you use,
It's,
stuff like that. Just trying to pick your brain.
Well, one thing that I was
yeah,
gonna
just
ask you, man, that you know how all the yen pairs they had a parabolic move. Would you consider those blow off tops
yeah, blow off tops.
for the like for example all the like the euro yen, the pound yen? Are those blow off tops in your eyes, or is that just more you expect more continuation?
Oh, I expect far more continuation, bro. This to me, I mean, this was just news induced. Sure, can we get more downside, but negative candle closes. I mean, I wouldn't be surprised to just see the any yen pairs continue rip anything against the yen just continuing to rip higher.
Yeah.
The problem is with the parabolic blow off top, bro. You're not gonna know it until it already happened. That's the thing. Don't try to anticipate, guys. Like you know what I've been banging about this very frequently. Like, I'm not even trying to predict shit anymore, bro. I'm just trying to focus on what I know is consistent and reliable. Wait for the market to reveal its hand. Don't feel like you have to catch every fucking tick, every turning point, because it will still provide you several opportunities in the direction after the market has unloaded its hand. For example, on the NZD franc, we not only did we catch the absolute bottom pretty much, because I was saying, you know, buy that fucking low when you see that capitulation. I had orders already in here. When I saw these negative candle closes, I was already in, bro. But look at how many opportunities this shit provided for us while this was going up. Setup 1, setup 2, setup
Look at that
3,
negative candle close too, right in the bottom. Just went over that.
right there. We just went over that. At a key level 2. What, at the 53? Yep,
And
0.53.
when the wick is bigger than the body, it shows you the power that it took to just print that candle at that point in time.
Yep, absolutely, man. Absolutely. So it's just, I mean, never feel like you have to try to predict shit, bro. Just, you know, as I said, understand why it's doing this. Because when you understand it, you're going to have a much more enhanced edge. You're going to know what you need to do when that shit happens. That is the point that the essence of what we're trying to relate to you right now. So, I guess since there's no other further questions, we're just going to get into the rest of this and then we'll go over the blueprint real quick. So that pretty much covers all the elements of price. How price behaves, essentially. That's all you really need to know, how price behaves. So with that said, then let's get into timings. Timings is pretty straightforward, guys. Remember, there's always going to be specific times of day, and days of week that are significant and conducive to proper trading and more opportunistic and high probability trading. So what do I mean? Time of day is essentially sessions. Let me see. Let's see how well versed you are in the Kenny, how many sessions are there in the Forex market? How many sessions
Three.
are there?
3.
Beautiful. And what are they?
Asian session, London and New York.
Fucking amazing, man. Love it. Asian session, London, and New York. Yeah, I can't even fucking mouse is not letting me spell it properly, but Asian session, London, and New York. That's it. Let me see. Who else am I gonna buy? Sal. Explain the timing windows of each session. So Asian session, when does it start and when does it end, and when is that peak window of high volatility? Remember, it's a 1 hour window. So when does the Asian session typically start? And let's talk about Eastern Standard Time.
Eastern Standard Time would be from 6 from Pacific Time would be from 5 to 6, I believe. So it'd be from 8 to 9 on your scale. Or
Yeah,
from 8
so
to 10 around there.
For NY, for New York.
8 to 10 Eastern Time for the Asian session.
yeah,
Oh, okay. Yeah.
yeah, you're right. So 5, yeah. So that would roughly be 8 p.m. to win. 8 p.m. to win. When would it end?
9 or 10ish around there.
No, 12 a.m. Remember, every session is a 4-hour block. It's typically that 4-hour candle, bro. It's every successful session is usually a very strong, aggressive 4-hour candle. But it's just and it doesn't even have to. Don't even focus on the candle yet. That I don't want to confuse you guys with that. But it just understand that every session is a 4-hour block of time. So if it starts at 8 p.m., it's going to end at 12. 8, 9, 10. No, yeah. 8, 9, 10, 11, 12. That's 4 hours, right? And then when is the peak volatile hourly window for the Asian session?
It would be
Yeah,
from
times. So
9 to 10, wouldn't it be? Around there.
yes, sir. 9 to 10 p.m. That is generally where you're going to see the market move during the Asian session. Sometimes we catch Asian session trades with Asian crosses. For example, with the Euro New Zealand like 2 weeks ago, that was a beautiful fucking trade. Right on schedule, bro. I think 9:30 to 10, we just had that parabolic move in a target. We were in, out, locked in our fucking money, went to sleep. Timings, levels, behavior of price. Now talk London, bro. When does London start? When does it end? And when is that peak hourly window?
London starts from around 1 or 2 a.m. Pacific Time. Or is it earlier, man?
Okay. No, you're good. Yeah. So 1, that would be 3. Okay, 3 a.m. When does it end?
And it ends around 7 your time.
Yes. 7 a.m. 3 a.m. to 7 a.m. When is that hourly window of peak volatility?
Be around from 4 to 5 a.m.
4 to 5. Is there? And remember, guys, this is never static concepts. Okay? So sometimes you're going to get fucking crazy movement at 3 a.m., at 2 a.m., at 6 a.m. It's never set in stone. The market makers are not going to make this shit easy for you. If you could, then we would all be fucking multimillionaires already. They're not going to make it easy for you. But just understand that on balance of probabilities, this is where you're going to get the timing windows in that hourly block where you get the most volatility and the optimal movement for that session. And in 1 hour, bro, you can get some aggressive hourly candles that move 50 to 100 pips. It's fucking crazy. Last but not least, man, New York session. When does it start? When does it end? And when is that peak hourly window?
For the peak hourly window, bro, it'd be from 5 to 7 around there. Your time. No, my time, my bad. So it'd be 7 p.m. Eastern time to 9 Pacific 9 Eastern time.
Okay. So New York session, man, it's going to be a little bit tricky. New York session starts at 8 a.m. So you were close. Yeah, so you said 5 a.m. Not bad. Pacific time. So 8 a.m. to 12 p.m. in the afternoon. That's a 4-hourly window. When is the peak hourly window, the gap time for that?
Should be like around 9, from 9 to 10.
Yes, sir. 9 to 10. Once again, it's never set in stone. Sometimes it could be from 10 to 11, 11 to 12, 10 to 11, 9 to 10. They're never going to make it easy, but on balance of probabilities, this is pretty consistent. You're going to see the most movement from 9 to 10 in that window. 8 a.m. is the what? The what session? The what open?
The NY open?
No, the NY open is 9 a.m. That's exactly when the New York session actually starts. But the 8 a.m., bro, is pre-market session.
Gotcha.
This is when the stock market starts opening up and all the actual flow from the United States is actually opening up. So 8 a.m. is generally the equity open, as we refer to it, or just pretty much the pre-market session. You have to be very careful with any significant movement during pre-market because they're usually traps. So if you start to see fucking price go up during 7 a.m. to 8 a.m., do not fucking chase that because I promise you 9 times out of 10 when New York opens, they're going to fucking reverse that, bro. 9 times out of 10, vice versa. If price is going down during pre-market, they're going to fucking reverse it. Okay? So we're almost done here, guys. Day of week. So now we covered all. We understand the sessions, the timing windows, etc., etc. Let's talk about days of week. Explain the weekly template. Let me see. Alex, explain the weekly template for us. How do we view Sunday, Mondays, Tuesday, Wednesdays, Thursdays, Friday? Explain that weekly template for us.
So usually Mondays usually sets the tone for the week. We usually put in the highs and the lows.
Okay, yeah. So we'll put establish session high or low. Okay, I like that. Monday. Session high or low. Okay. So Sunday, Monday, we call them trap days, right? Because generally this movement is insignificant and they're just trapping volume. Sunday, Mondays are generally establishing a higher low. What goes on Tuesday, Wednesdays? What do we typically expect and see on Tuesday, Wednesdays?
So usually those days were considered like the most volatile days, right?
Yeah, they could be trend days, impulsive days. But what typically happens? Like, what is being established usually Tuesday, Wednesdays? It starts with week or ends in week, really. Starts with an H. Starts with an L. Of week.
The highs and lows of the week.
Yes, sir. Yes, sir. Highs and typically Tuesdays and Wednesdays are establishing highs or lows of that week. Okay. Thursday, Fridays, what do we typically anticipate or expect on Thursday, Fridays?
Typically reversal, right?
Yep. We usually call them midweek reversals, or you either get parabolic explosive continuation moves Thursday, Fridays, or you just get flat out fucking reversals. But generally, net, Sunday, Mondays, or trap days is just establishing a high or low for a session or a day. Tuesday, Wednesdays, you see a high or low of week established. And then Thursday, Friday, you actually get the parabolic move where you just continue, or you could even just fucking reverse. You know? But yeah, most of the volatility is going to be conducted from Tuesday to Friday. That is why we rarely get active on Mondays. Rarely. There are instances, bro, where Mondays are just fucking heavy hitters, where we might have a over the weekend trade from last week and Monday just starts ripping into targets and we might have busy Mondays, but it is very low. It's not all the time. It's not frequent, consistent behavior from us. So thank you for answering that, bro. And last but not least, levels. Levels. Let me see who am I pick on. Danny, bro, explain levels to me, bro. There are two aspects to our levels. What are they?
This is where you're talking about we can either transit in two ways, like parabolic blow-off tops or capitulation.
No.
Or no, I know this is the one where trends they break out. And extreme points of price.
There we go. We're on the money now,
Mhm.
bro. Okay. Extreme points of price. So levels. If we were to conduct and focus our attention at any particular conjecture points, where would they be? You just said it.
Extreme points of price, and then we're also
Yes.
looking for key levels, like in price, where they tend to touch. So like in key round numbers.
There. Fucking nailed it, bro. Nailed it. Key round numbers is our first element of levels, or 50s, midpoints. That's where you're gonna get the most reactions, and it's in our Discord in the tab. Why the importance of that? But bottom line, big institutions interact off these numbers. I don't know where the fucking retail space they started calling them psychological levels. I never understood that shit, but it's whatever. Net just understand that big institutions operate off key round numbers, and then the other aspect of levels is at the extreme points of price. Why? What tends to happen at the extreme points of price? Denny, explain that to me.
They tend to fail, so they break and then they'll fail.
Yeah. Yep. Over what percentage of the time?
85 to like 90%.
Yes, sir. On the fucking money. Over 85% of the time, breakouts will fail in the foreign exchange market. Why the fuck are you playing against those odds? You're playing any game. Understand your edge, understand the playing field, understand what parameters you can operate in, the rules, who are the winners, who are the losers, etc., etc. If you don't understand your edge, man, this is just going to be a ruthless game for you. Like I said, I'm not going to be fucking playing Call of Duty against the Asian kid. I know I'm going to get my ass fucking whooped. I'm not even going to fucking try, bro. I don't care how good I think I am. I just know I'm going to fucking lose. It's the same thing with the markets. Know your edge, know your competition. Don't play against people you know you're going to lose. The people that are the winners are in this business are the people with money that move the fucking markets. You don't want to play with people you don't want to play against the movement of price. You want to play with it. So that pretty much covers the holy trinity of our process, and it's so important that you guys understand that, because then this starts to coincide with the blueprint. So now let's talk about that, and then we're going to get into our watch list and then call it a wrap. So this is pretty much what we look for day in, day out, week after week, month after month, year after year. It doesn't fucking change. It's probably not going to change. Maybe there's going to be some slight variations here and there, but we will adapt and adjust as they come. But net, guys, this is our blueprint, right? So as we just said, we focus and conduct our activity and our attention at the extreme points of price. So we like to look for downtrending markets, because we know as certain extreme points are breached, you're likely to get a false break and reversal. Timings, levels, behavior of price. So when you get a level breached, how it behaves underneath that level, where it behaves, levels, key round number, timings could be New York session, late Asian session. And remember, a key element to our trading process, remember, we execute trades only late Asian session, roughly around 9 to 11 p.m. Eastern Standard Time, and New York session, 9 to 11 in the morning. Anything outside of that, you probably should not be executing trades outside those timing windows, because you will get fucking murked. So you get your level breached, significant structure point, extreme point. You get price behave and interact with the key round number. False break. You say we'll get a type 1. We'll get into all our setups in a bit right now. But net, timings, levels, behavior, price. So now when behavior price, it's going to coincide with a lot of our setups. What is a setup? A setup, put simply, is your reason to enter the trade. What does price have to do? What does price have to look like for you to actually risk capital in the markets? That's all the setup is. Are very straightforward. We have an arsenal of them, but pick one that you just want to fucking master, even if that's what it takes. So these are what we call divergent structures or reversal. We're essentially, man, if somebody were to ask you, how do you make money in the market? We're reversal specialists. If you had to just simplify it, just say, I'm a reversal specialist. That's all we trade is reversals, really. So you're going to get a type 1 setup, which is that lower low, marginally lower low, and then boom, break, pull back, continue. Grind line break, key round number, timings, levels, behavior, price, and then boom, off to the fucking races. You want to be buyers here. This is our type 1 setup. Why? Because there's order flow around it. Type 2 setup, lower low, marginally higher low, break of a neckline, pull back, continuation, continuation. Type 2. Type 2 variant. Type 2 variant is where you get the same structure, but then on this you get a third attempt. You swipe all these lows, and then you start the fucking bullish rotation cycle. That's a type 2 variant. Type 3 are generally double bottoms, equal lows. That's pretty much it, you know. Now, geometrically, they provide very shit reward to risk profiles, but on macro time compressions, double bottoms are generally macro fucking reversals, bro. Tied in with the grind line break, they're macro fucking reversals. So you might get that little pullback return move, and then boom, you're looking for trades here and anywhere in between to see how far you can ride this. That is a type 3. Now let's talk about our geometric structures, which are inverse head and shoulders. These are very reliable bottom structures. Remember, with inverse head and shoulders, though, you're taught when you get the break, you enter here, and then you put your stop here on that shoulder. Fucking wrong. In the Forex market, you get that break, and then you get those deep fucking retracements that come back for those stops, and then it's off to the races. You get a grind line break, and then it's off to the races. And then from there, you might get little funnel setups, etc., etc. That is one of our geometric structures. That's another setup. Remember, it's also important that we get front side, back side moves broken before you take a trade, because the algorithms are going to pick up on that volume, and it's generally signs that there is a shift in momentum, a shift in trend, a shift in sentiment. So that's why we put massive emphasis, and trend lines, or grind lines as we refer to them, are such a massive and vital role in our process. So ensure that you get that as you get those breaches of extreme points, timings, levels, behavior, price. You need to see a grind line break. Front side, back side. So long as you remain underneath or above a trend line, you need to play with that trend. Trying to counter trend, that is going to lead to massive and poor results. It's when you get that break, pullback, continuation is when you can trade with high confidence in that direction. Same thing here. As long as you're on the back side of a move, the front side of a move, you need to play in that general direction. A lot of people who try to call tops short here get squeezed out. Short here, get squeezed out. Why? Because you're still on the front side of the fucking move. You need to wait for a break, pull back, peak formation high, whether that's 1 push, 2 push, 3 push, etc. But we're not really going to cover short structures right now. We're just focusing on longs, because that's what we specialize in right now, longs. So grind line break, front side, back side moves. You need grind line breaks. What else? Oh, and then we have just that setup. We have also trendline breach and failure setups, which is another reliable setup that we see over and over. You get 1 touch, 2 touch, breach, and failure. Continuation. You get 1 touch, 2 touch, breach, continuation. We saw it with the fucking CAD Frank. There you go. The trend line starts to form. 1, 2, 3, breach. Let me get rid of these drawings. Breach, and then look at that massive bounce. Look at that fucking massive bounce. And you would just run into the midpoint and the high. That's it. You're done. You're in. You're out. So there's that. And that's literally it, guys. If you did nothing else but master those core setups, those key elements to what we trade: grind line break, significant daily, weekly, monthly low breached, behaviors of price, key round number, type 1 setups, type 2 setups, funnels. Sometimes you'll even get funnels at the lows. That's a last but not least. Yeah, that is one of our other setups, excuse me, are the funnels. You get price, contract very tightly, and then you got a midpoint high volume. You take your volume by price. It gives you an accurate depiction of where you're going to get high volume. Boom, off to the races. Yes, you can get several variations. You could get a false break, little stop hunt, and then continuation. You get a break, hard pullback into the high volume zone, and then continuation. Key example of that was in the dollar cat today. Dollar cat was a perfect example of this. You got a break of your funnel, hard, aggressive pullback return move into high volume zone, and then look, off to the races. You get those negative wicks. Off to the fucking races. We in the money, baby. We in the goddamn money. Easy peasy. Just like that. That's pretty much it, guys. Focus your attention on that. And if you were just to focus on one key template, one key setup, I will leave you with this. Once again, focus on those lows being breached. A grind line break. You could have a trending market, etc. It's just constantly trending, and then you get that low established, then you get that break. Focus. You get that break. Once you get that break, expect a pullback in that neckline. So if you see a type 1 setup, you could and you see a negative wick down here, you could generally get in very fucking tight. There's your first entry. That's how you would play that. Say you missed that. Okay, wait for the break, grind line break, pullback return into that grind line, which generally coincides with the neckline. Wait for a micro grind line break, and then boom, you're in. Wait for that little break. You have a tight stop, target at the midpoint, at the high, and leave some fucking runners. You could also get a funnel that forms at the neckline. A funnel could form at the neckline. So that's cycle 1. Once you get that first impulsive move, that's cycle 1, you're generally given another opportunity to enter. So you could get a micro range with the stop hunt. You could get a complex pullback. You could get another funnel. It doesn't matter. I'm equipping you with the skills. However it unfolds is anybody's fucking guess, but all I know is that whatever unfolds, we're going to fucking make money from it. But if you have a type 1 setup with everything that we just discussed, if you just mastered this template, a bullish rotation cycle, impulse 1, then you look for a second opportunity, impulse 2, that's it, you're done, you're in, you're out. If it keeps ripping, who gives a fuck? You made your money, you get in and you get out. If you just mastered this template, guys, I promise you, you just have to make a lot of money, with or without me. Obviously, it's going to take a lot of time to master it because, as I said, there's a lot of times where all of this checks off our criteria list and we don't take the trade because it's just intuition, or it could be high impact news on the calendar, whatever. It's going to take many years for you to master this, but you will get it down. You will get it down. And as I said, pay attention to those little details, negative candle closes, etc., and that's it. Off to the races, man. But don't be fooled. As I said, this is what's taken me many fucking years to master. Because how you conduct yourself when it how do you handle the situation when it doesn't work out? That is the essence of trading, man. It's not you can't get it right 100% of the time, but just this template alone, from my back tested data, is 85% hit rate. That is fucking massive, bro. Fucking massive. That is the blueprint. So that's pretty much it. Let's just review some trade setups for the week real quick. So this is the Euro Turkish Lira. We're obviously not going to trade this. I was just looking at it for back testing purposes, but nothing interesting there. Grind line break on the Euro ZAR. We are getting at an interesting level, so we might put this on our watch list real soon. But for right now, there's nothing interesting. We're not looking to short. We're not looking to catch these moves, guys. So like I said, let it be. Doesn't matter how good the setup looks. I mean, you did get that push into a key level, grind line break, and then boom, first pullback and then continuation. Could we have made money on that? Absolutely, but we're not looking to. So it's coming into a key round, key level here. So not key round number quite yet, but key level. How price behaves there is anybody's fucking guess. But if we see a grind line break, any of the setups that we just discussed, we will be looking to take the Eurozar long. Aussie Singapore dollar targets have already been made. There's nothing interesting here. Micro target made. So unless it winds up again, provides us another setup, we do nothing. We do nothing. We unfortunately missed this whole fucking trade. It just happens. But we couldn't even hop on board to continuation setups other than maybe this little grind line break here. Follow with that stop hunt. But either way, we missed that. Big fucking deal. All right. This is a perfect example of a setup not working, bro. Look at that. We didn't take it. I was just waiting to see how it was going to play out, but it's going to happen. Setup did not, generally here. I mean, it could be that tomorrow we wake up and it fucking does something like that. It comes back into the funnel. If it does that, then yeah, that would be a reasonable opportunity to enter and then just take it to target. But for right now, this is a failed structure. You wouldn't trade that. And I said, generally, man, where you're already into a trend, you try not to chase it, bro. Try not to chase higher funnels because their probability starts to erode. The lower that you can catch them, the highly probable they are. The higher that they are into a trend, the low probability or their low strike rate setups. Pound New Zealand. Targets have already been made on this one. So I'm a little antsy on looking for longs at the moment because this thing is just basing out. I don't really like it. I mean, you do have a little funnel here. But once again, it's not the best structure. It's not the cleanest structure, and we're not going to take it. Euro New Zealand, well, it did breach, obviously, a very, very significant level. Broke out of a range. It looks like it's trying to fail. So if we were to zoom into the 15-minute, you have a grind line break here. And what are we looking for? I mean, you do have a divergent structure here, type 2 setup. So that's usually good signs of a reversal. There you go. You got that pullback, break, return move. You have a geometric target provided by this structure from high to low of the range. Target has already been made. So what do? You wait. You wait for price to provide you another setup if it provides it to you. That, like I said, could form in many ways. It could just rip, complex pullback, grind line break, continuation. You could have another funnel that forms here, etc., etc. You're in, you're out. But for right now, target has already been made. It is interesting to the extent that it did breach this macro range, and it looks like volume was trapped. So be prepared for that. There could be a massive reversal on that, or there may not. Pound Aussie, perfect example of what we just fucking talked about. Literally what we just talked about. Obviously, we didn't take this trade, but just wanted to reiterate the example. Significant low breached. Key round number at the 1.09, 1.09100. Price came in, dip, break inside prior weekly low, funnel, targets, you're in, you're out. And then you could have taken a grind line break here. Target key areas of liquidity and structure. But nothing as of right now. Don't chase shit. There's nothing to do here. Just don't chase it. Don't worry about it. Euro Aussie, looking somewhat interesting. I like to and make sure when you guys conduct your analysis, you're looking at the hourly time frame, bro. Try to train your eye to see specific structures. This is not the best structure for me per se, but negative candle close, funnel, Zoom in to see if the midpoint is, yep, key round number. There you go. Take your volume by price. If it lines above or exactly at that that midpoint, that's how you know it's a good level. And that's how you know the setup is 85%. Yeah, we wouldn't have taken that. Wait, hold on. Give me a second. Because sometimes if you draw it wrong as well, you're going to get wrong data. So you try to get it as close as you can to the initial high of the range and before the breakout. Yeah, so that is what it is. But it does check off our criteria. So if that's a trade that you decide to take, so be it. Grind line break, weekly significant low breach, negative candle close, funnel. It could be that we return move. So actually, let's just take the most recent data because that's probably what's going to happen. Let's actually do that. Let's take all of this data from the high all the way to the breakout. And it might change the volume spectrum. No, it still stayed the same. So yeah, regardless, most likely this is already ripped into target. You could tell by that wick. So if you were to take your geometric structure from high to the low, okay, it's almost going to make it. We're getting there. But yeah, this is another A1 setup. Regardless of the volume not playing out, it's almost going to make target. Same shit. We can't make this stuff up. Become a reversal specialist. Pound CAD. This was actually really good. Although we didn't take it. Significant level breached. Significant level breached. You have your reversal there, divergent structure. So now at this point, you're just looking for setups. Remember, grind line breaks. It could be in the form of funnels. Yeah, so as of right now, this to me is a bullish rotation cycle, meaning that it's likely to continue higher. We'll most likely target these areas of liquidity. But what do we need to see before we hop on board? We need to see some type of setup. So we might funnel out here and then boom. Just be patient. Wait. And once again, another core setup. NZD CAD, significant weekly low breached, divergent structure, funnel. Not the cleanest, but this one was cleaner right here. It just had a false break. These are also 90-10 setups. 90-10 setups. 90% of the time, they'll move in your favor. Yeah, so far nothing tradable yet. EuroCAD. Yeah, this structure is fucking no. We don't trade this, bro. I said we are still confined in a range. Anything in between, it's just chop, bro. You're gonna get chopped to fucking pieces. So you don't trade this, okay? Doesn't matter how good the setup looks, you don't trade it. Aussie CAD is actually starting to look really fucking interesting from a macro standpoint. This is a 4-hour setup, so we have that 1, 1, 2, 2. I think we'll work our way into a third touch. So for me, if this does break out, all you got to do is look for continuation setups on the hourly 15-minute time frame to that optimal target. Because from a macro standpoint, if we take a look at the daily, we did get a macro grind line break. We did get a significant low breached. And we got that first pullback return move, and it looks like we're basing out. So I think this funnel will actually play out from a macro perspective. But yeah, as I said, you don't want to trade within this chop. You need to make sure that you actually see some intraday opportunity. So until we see something from then, that remains on our watch list, but something we're not going to trade. Mexican peso is actually looking really fucking good. We're almost done. Funnel's completing. So if we see something like this, yeah, then we'll look to start trading the dollar peso higher, but that's getting close. We're already long the dollar CAD, so that's why we're not really rushing any trades. This is a phenomenal fucking setup. Once again, prior low of week breached, negative candle closes, funnel, high volume, breakout, pullback, return, move into that high volume zone. Now we're just working our way up. Same shit over and over. Hell, you could even argue another grind line break here. You could absolutely argue that. Look at that. The algorithms pick this shit up like clockwork, guys. Don't complicate your trading. This is literally the holy grail, what I'm teaching you. Nothing interesting on USD franc. Move on. NZD franc missed the target, so I think it's going to set up a more prolonged funnel. This was a very shorter term one. Not the best structure also. But I do believe that the NZD franc sees far more upside. So that remains on our watch list. Aussie franc, nothing interesting, but I mean, pick the best of the bunch. Don't trade every franc fucking pair, no matter how good it looks. Pick the best of the bunch, guys, okay? Just because you believe the yen is going to devalue, that doesn't mean long everything against the yen. That's overexposure on your portfolio, and that's just fucking poor risk management and poor trading. CAD franc, nothing interesting right now, but other than our trendline breach and failure setup. But as of right now, I just wouldn't go charging in here. Pound franc, we do believe macro-wise this is a long, so that's why this remains on our watch list for now until we see continuation setups. We do believe that the midpoint of this trade will be hit, or of this structure, and that is plenty of room to go. But you need to look for intraday setups that will provide that for you. So far, we've got nothing. Euro franc, nothing interesting so far. Pound yen, yen is all over the fucking place right now, guys. This is not tradable behavior for me. This is just disgusting price action. There's nothing clean about this. I mean, sure, you could argue this probably is decent as you're gonna get. You have your funnel there, false break, and then boom. That would have been a phenomenal trade, but also you have this here. Another little baby funnel. Grind line break. And then after that, yeah, man, it would have been very difficult to optimize any other potential setups, but net, that's why you have to catch the shit early, because as I said, if you get impulse 1, impulse 2, and then you're generally done. We just discussed that. Franc, yen, I think this one had a parabolic move. So it like even on shorter time frames, man, everything's fractal. As I just said, this is a parabolic blow off top on a shorter time frame. But macro wise, this thing could still rip higher. But this was a parabolic blow off top. And look how quickly it collapsed. Aussie yen, same thing. Yen pairs are just kind of all over the place. I don't know, the Bank of Japan is doing a lot of fucking intervention right now. That's why we're getting a lot of that movement. So you definitely want to stay away from that. So yen pairs are not on our watch list at this moment. The euro yen actually played out very well, though. We did have a clean setup here. Midpoint, funnel, 1, 1, 2, 2, breakout, and then over performance. Massive over performance into target. Dollar yen could possibly continue running higher. Nothing interesting. Pound dollar. You saw it here, guys. Same thing. Grind line break. Low of week breached, and then boom, that's it. You just look for setups real quick. This would have been a phenomenal entry if you could find a grind line break. Get in at that, let's say, candle close, stop order right there, and then that's it, man. You just run the trade to the next area of liquidity, or until you have geometric targets that present themselves. NZD dollar, you did have a nice little funnel set up here. Obviously, we didn't take it. So we'll see what happens, but this could help our dollar CAD narrative, as we're starting to see weakness across the board for dollar crosses. Although I will say the Euro USD is looking interesting. We're going to start shorting this soon. The euro is probably the only thing that will short, just because the structures are a lot more cleaner compared to other charts. But we do, as I said, I fucking erased it. God damn it. Yeah, I erased it. It's all good. But we do have a rising channel here. That's very, very compliant, man. I do love how clean and compliant this structure is. Then you have your price splitter. So you guys see how price respects and behaves with trend lines. We also have a pullback return move into a neckline on our macro head and shoulders, as we discussed. So it could be that we just get one more spike. As I said, we do have some heavy hitters a little later on tonight. So price could just spike and then fail. And if we see that, holy fuck, we better be goddamn short the euro. Because I promise you, not only is it going to breach that goddamn low, but it's going to continue to accelerate into our target. We have a geometric target here. You put it to the neckline. And then that's it. So this shit could free fall all the way down to 1.03. So yeah, euro is definitely going to be on our watch list. Dollar CAD right now is the only trade that we're holding. So just be aware of that. So we should wake up to some money tomorrow if it accelerates into these targets. And I do believe that if the euro continues to collapse, that's obviously going to be good for the dollar. And we probably should see some new highs. Let's take a quick look at the dollar index real quick before bed. Yeah, same thing, confined into a downward channel, and this thing is just going to be all over the place. But net, I do believe that we see dollar higher. Dollar higher is going to be good for that. Stock market. Oh, that's a nasty fucking gap, bro. What the hell? Yeah. Stock market's a little all over the place. I know we're also holding crypto, so let's take a look into some of the crypto assets that we're holding. BTC, not much to really discuss here from a daily time compression. Still very grueling price action. But net, this is just a minor pullback, guys. This is from high to low, even with that recent scare that we just had, that is about 19% pullback. That's fucking nothing in crypto. That's normal. That's healthy. So we're still on track. XRP still confined within our macro funnel. So no real cause for concerns here. 1, 1, 2, 2, 3, 3, and we're starting to contract real fucking tight. So an explosive move is coming real soon. When, where, how, anybody's fucking guess, but it's coming real goddamn soon, man. You don't contract for very long. You don't just do this in funnels, bro. You're just not gonna fucking hover there for the rest of the year. If you did, I'm cutting my fucking XRP and I'll take my loss, bro. I'll take my fucking loss. I don't give a shit. LDO is another thing that I'm holding personally. So not much structure here. We just got to wait it out. XLM's very similar to XRP structure as we talked about. We do have a position in that. It's a minor one though. Yeah, this thing needs definitely more time to elapse. But we're getting close to a fucking squeeze anyways. Yep. And that's pretty much it, man. We missed the whole fetch AI movement. I got out a little too early, but at least I caught a decent size of the move. But man, that was a beautiful swing. We do have a position in Ocean. First target made. That's why you're getting that pullback, and we could expect a little bit more downside, but we could eventually expect a $5 target. So things are looking good. You know, I said not much has changed. Things are still looking good. If the dollar goes up, that's generally bad for risk on assets, but I think that there's going to be a different play in the landscape that people are going to park their money into crypto this year. Regardless of what's going on with the world. I think people just want a different alternative to the money narrative, a clean skin, etc., etc. So anyways, guys, that is today's training. I know it's really nothing new under the sun, but I hope that this stuff just keeps creating those epiphanies for you. I hope that day by day you start to get better at your craft, and then you start to see. Because once you see this shit, man, you can't unsee it. That is my goal. I want to help you get there. With that said, before we call it a wrap, do any of you have any questions with what we just discussed? Questions? So far, so good?
Yep, I'm good on my end.
Yeah, pretty good too, man.
Same here, Dave. Good.
Yeah, I'm good.
Awesome stuff, man. I love to hear it, guys. I'm glad that you were all here. There's a lot about you. Wednesday, we'll have another meeting, and we'll see how this week plays out. But just stay focused, man. Stay focused, stay ready, stay sharp. there's just so much fucking volatility and opportunity in the markets to be dicking around, man. So the quicker that the more focused you are, the quicker that you can get to your objectives. If you have any questions, don't ever hesitate to reach out to me personally. I'm always available when I can be, and if I'm not available at that particular moment in time, we'll always schedule some time to be available. But much love, guys. Thanks for everything. I'm wishing you nothing but continued success, and let's get it. You got anything to add before we call it a wrap, Chris?
No, sir.
Fuck
Great
yeah,
meeting,
man.
dude.
Well, love each and every single one of you. You guys get some rest and enjoy the rest of your night, okay?
I see you, Chris. See you, Dave.
There's some.
Yeah, take care, man.
Yeah, thanks. Good night, everyone.